Hello, this is Ed Burke with PlaceForTraders.com. It's Thursday, August 27th. Tonight I'm going to talk about the gold market. Here I have a daily chart of the December gold futures contract. You can see that in the last month and a half, the market has been trading in a somewhat sideways channel. The market settled on Thursday at $947.30 an ounce. Now, I am looking for the price of gold to start going higher as a pure supply-demand play, not taking into consideration other factors that might move gold, like geopolitical concerns, currency movements. Gold is a safe haven. As a pure supply-demand play, demand for gold drops off in summer months. What you traditionally look for is prices to be weak in August, with European jewelry manufacturers basically shutting down. Now, what I'm looking for is the price to start going higher in September, prior to the fourth quarter. Now, in the fourth quarter, global demand for gold goes up, starting in October with the Indian wedding season. Then near the end of the year, you have U.S. consumption rising with the U.S. religious holidays. So that's what I'm looking at, is gold going higher. Now, you might be telling yourself, good story, Ed. How do I apply this practically? Well, I'm going to show you some things on the chart. In the last 5 trading sessions, you can see that we've seen some consolidation in the markets. You see these condensed ranges. Now, if you drew a trend line up from these lows, and then you draw a trend line down from these highs, you could see what looks like a pennant formation. Now, a pennant, obviously, that's consolidation. Why they're important is because you usually get breakout moves after that. Now, obviously, we don't know what the next move of the market is going to be, but it could be a breakout to the upside. It could be a breakdown to the downside. Now, also, many of you might have noticed, looking at this chart, you see a formation, what looks like a head and shoulders. These highs being the left shoulder, these highs being the head, and the most recent highs being the right shoulder. Now, a head and shoulders formation is a bearish formation, which is contrary to what I'm talking about by buying gold. Now, what I'm looking at, if we do get a breakdown in price, like I said, December gold on Thursday settled at $947.30. If we get a little breakdown in price, I'm not looking for gold to go bearish. I'm looking at, if we get a breakdown to around the $930 area an ounce in December gold, that could be an area of support to buy. On the flip side of that, if we get a breakout, if we don't see weakness in the market, in fact you see strength, the area around $960 an ounce in the December gold, if it breaks out to the upside, you're basically buying on strength. So that's what I'm looking at. Obviously, we're going to see how that plays out. That's all I have for this evening. Traders, I know that there are people right now watching this video that like the information in these videos and don't like what's going on in their account. You know, if you'd like to get my analysis for more than 3 or 4 minutes every day or so, you need to go to my website. It's PlaceForTraders.com. You go on there, you hit the Open an Account button, fill out the information. You can fill out the transfer form. It takes just a few minutes. Thanks a lot and good trading.